All right, family, welcome back. So now that we have an understanding of candlesticks and support and resistance, we're going to dive into market structure, the trend or the direction of the markets, right? The markets only trade in three directions, only, exclusively three: upwards, downwards, and sideways, right? An uptrend means the buyers are winning, the bulls are winning. That's what's called a bullish market. The downtrend is a seller's market, and the sideways market is an indecisive market. Neither the bulls nor the bears are in control, right? So let's take a look at what they should look like. We have the uptrend, right? The market is making higher highs and higher lows, creating an upward zigzag pattern. Each new high and low is higher than the previous highs and lows, right? So on the charts, you will see the candlesticks, of course, right? You will have a low, you will have a pivot low, what's called a pivot low, and you will have a pivot high, right? Once price comes down and makes a low, a higher low than the previous low, we can only deem this to be a higher low when we make a new higher high, okay? So this high has to be higher on the chart than the previous high, and this low has to be higher than the previous low. And then we get a new higher low, and then we get a new higher high, and so on and so forth, right? That is an uptrend. The downtrend is the opposite. We have a pivot high, we have a pivot low, right? Then price comes back up to make a new high, but this can only be a new high if price makes a lower low, right? Because maybe price decides to not make a lower low and go upward and go above. This will not be the new high. The new high will be the next high, right? So on the downtrend, we are making lower highs and lower lows. This high is lower than this high. This low is lower than the previous low. This low is previous is low. This low is lower than this low. This high is lower than this high, and so on and so forth, right? And last but not least, we have the sideways market. We're not making any new highs or lows. We're basically trading within a range. That's why it's called a range, right? There's a range. This is the range, right? We're making similar highs and lows. Neither the bulls nor the bears are winning in this type of market structure, okay? So let's get into what it looks like on the charts. All right, so we're on the QQQ chart. We're on the daily chart, the daily time frame, right? And to be clear, the higher time frame structure, it holds more weight than the lower time frame structure. Just like we said in support and resistance, the higher time frames are hold more information, right? So let's first identify a downtrend, right? When we have a downtrend, we have a pivot high. This is our pivot high, meaning that this is the most recent high, right? And we have price coming down to make a new low, right? And then we have price coming up to make a new high. But this can only be a lower high if we make a lower low. And what do? We make a lower low, right? So now we have this zigzag type of pattern, right? Price comes up, makes a new high. This high is lower than that high, right? This low is lower than this low. This high lower than this high. This low is lower than this low. That is a downtrend, right? When we're in a downtrend, we want to look for selling opportunities. The trend is your friend. That's the old adage that traders use. The trend is your friend. So when we're in a downtrend, we want to look for selling opportunities. All right. So the best way, or the way I like to do it, is I like to take my trend line and just simply, it doesn't have to be perfect, and you get something like this, right? Okay. And you'll see, just like it looked on the diagram, it will do this. Price does this. Zigzag, right? You can look for selling opportunities at these, where price reaches these lines, right? Let me delete this. So you'll notice after you draw your line, right, you can look for trading, you can look for selling opportunities, right? You can also look for buying opportunities, but it's best to go with the trend, right? So we're on the daily chart. Here would be a nice, because since we're making lower highs, right, we can see we're clearly making lower highs. This high is lower than this high, and this high is lower than this. We're clearly in a downtrend. We can look for selling opportunities, right? So you could take a trade here, and you could ride it all the way down. If you have the gall, you can ride it all the way down to this, or until you see some type of reversal pattern, right? Until you see price reversing this big bullish candlestick engulfing this red candlestick. That would be a great time to exit your trade. If you started to sell here, you could sell all the way down here and exit here. That would be a nice trade to take. You could also get back in when price makes a lower high. We have this high upper wick, meaning that the sellers are coming back in. The sellers are coming back in, and we're making lower highs. So that's a good sell signal. We want to sell, and we can sell all the way down to the line, right? The line is already drawn because we've already made lower lows and lower highs, right? The line is already drawn, and you could get out, right? So that's the downtrend, all right? So it's basically about training your eyes to see lower highs and lower lows. Now let's do the uptrend, right? It's the same thing except opposite. We want to look for higher highs and higher lows. Very simple. This is the uptrend, right? Why is this an uptrend? Price is making, this is our pivot high, this is our pivot low. New high, new low. Higher high, higher low, higher high, higher low, higher highs, and higher lows. And then we still, this is still not a lower, this is still not a lower low until we get a lower high, right? This high is higher than this high, so we're still in an uptrend, even though it's not as cute as we want it to be, right? We're still in an uptrend. That is a clear uptrend, right? So in an uptrend, we want to look for selling, or excuse me, we want to look for buying opportunities in an uptrend. In a downtrend, we want to sell. In an uptrend, we want to buy, right? Let me delete these. Actually, just let me delete all of this, and we could just do it again, right? So we want to look for buying opportunities in an uptrend, right? Now, because we're making these these higher lows here, we could also, this is also an uptrend in itself, right? And you'll notice we can take buying positions here, right? Price comes down, it sells off of these new highs, right? We see some type of reversal. Let's zoom in on that. We see the selling momentum slow down. We have this small red hammer candle, right? Then we have a small green hammer candle. This implies that the selling momentum has slowed down, right? Look, I want you to see this. Selling was going on. It slowed down. Buyers are trying to step back in. Once we get a confirmation candle like this, we could take a buy position, right? And what happens is we get a decent, let me zoom out. We get a decent play, right? Price goes all the way up here, up to where we start to see the new highs slow down. Buying starts to slow down. We get these two red candles. That's almost a confirmation that the buying is done for the time being, right? And we get out. So we look for buying opportunities in an uptrend, right? All right. Let's delete everything. So now let's get into the sideways market. So here we have a sideways market, right? There's no true trend. There's no real defined buying or selling. Buyers or sellers are not winning, right? We're basically trading in a range of price, right? Now, we can take trades here. We can look for trades here, right? We'll do the same thing. We will use uh these levels. We will use these points as levels, right? This is clearly support, right? We have many touches. This is clearly resistance. We have many touches. We can play just like we played with support and resistance in the sideways market. We can play level to level, right? We can buy at the bottom. We can buy at the bottom. And when we get to that level, we can exit. We can sell at the top. Sell at the top and play down to the next level, right? Very simple, right? When we place our trades, we can place our stop losses just above the zone, above the support resistance lines. Excuse me, I'm fumbling. We can place our stop losses just above, right? And for support, we could place our stop losses just below, right? So just in case price decides to break out of this range, we won't take a big loss. You get what I'm saying? Right? Just in case. See, this is a place where price broke out of the range, but it was faked out, right? It broke out, but then it was rejected back down, right? So we're still in a range, even though the candlestick broke out, even though prices broke out, it was faked out, right? So people that bought here when they saw price break out of this range, when they bought here, they were stopped out because price came back down and sold off, right? So that's basically the range market, right? So we're going to go over one more thing and we're going to call it a day. So let's find another trend. Let's find the trend. All right, let's find this uptrend. This is a good uptrend right here. All right. Now this is how we trade the trends, right? We're making higher highs and higher lows. Higher highs, higher lows, right? We want to buy at the bottom. We want to buy in an uptrend. We want to buy at the bottom, right? When prices start to make lower lows, when prices start to make higher lows, right, and not continuously drop, we can look for buying opportunities. Here's a great buying opportunity. We got 3 consecutive green candles. 3 consecutive green candles here, right? 1, 2, 3. This is a good buying signal. This means the buying momentum is coming in, right? The buyers are starting to step in. We can play because we would have this marked out already. This is an area of resistance. Even though it's diagonal, it's an area of resistance. We can use these diagonal lines as support and resistance. We want to buy at support and sell at resistance. So we can literally buy at support, right? Buy here and play it up to the resistance. Once you see price starting to reverse, once you see buying momentum slowing down, you get out the trade. You can literally make your money. Let me get this brush tool. You can make your money from here to there. Just like that. Trading is easy. It's easy. All right. So that's support and resistance, people. So that is market structure. We want to buy when in an uptrend. We want to sell in a downtrend. And in the range market, we're going to just play it like support and resistance levels. Very simple. Very simple. So if this video was valuable to you, like the video, comment, and subscribe. Right? Show some love. Love is free, just like this video. And I'll see you in the next lesson. Peace.